5 things that you might have not claimed on your tax return.
Whoa. Wait, what?
Yeah, now you're perking up.
I've wanted to talk about shit you can claim on your tax return and get past the ATO for 2 years.
No. We're not talking about how you're trying to sneak a sports car into your company tax return.
Okay,
Let's
cool.
not try what you try
Okay, cool.
because
Right.
it's just a headache
Yeah.
having that argument.
It is. Let's not get into an argument. But Mr. ATO, if you are listening, I don't do that.
So obviously, this is like a disclaimer. This is not tax advice. You have to talk to your own accountant. But make them aware of a couple of things and ask them, hey, I'm doing this. Can I claim this? Because if you ask the question and they didn't know, they're like, oh, I didn't know you're doing that. Of course you can.
One thing I have found with a lot of, I'm going to say 100% of our clients is that, and this is for everyone out there listening, you have to learn how to ask questions. We talked about this the other day. When you're dealing with an accountant is always going to cover themselves.
They should.
And they should. Just like as tradies, you will all cover yourself with the answers that you give and the installations that you do. Yep. Your skill set and your ability to earn money is dependent upon that. And so you should never fucking fudge it that in the case that you could lose your licenses and so on.
Correct.
And so this is what an accountant does. And so what everyone out there needs to learn to do is to structure the questions better that they actually ask their accountants. And I know a lot of you out there don't actually even know the questions to ask. This is where we come in. This is where our coaching services come in. This is where we can have discussions with accounting coaches. And while you guys aren't giving advice to these people, you can talk to them around, hey, what the different things are that could be, the gray areas or whatever it might be.
I find a lot of people buy cars and
Sports cars?
utes.
Oh, utes. Okay.
Utes.
Like
And
Raptors.
there can be some strange setups. So if you buy a ute on a loan and your loan account or your loan, the repayment doesn't come out of your bank account in the company, your accountant might not see that you're making repayments even though you bought that car in the company car and it's just like a setup, wrong bank account. It can happen. Maybe the purchase of a car was missed. Especially if you buy a car on finance in June and the first repayment comes out in July, but you already have that car and you're using it, but you just didn't forward the paperwork, you might be missing out on heaps of depreciation for just not making your accountant aware that you bought an asset. I see this a lot more with business activity statements where people buy a car in the December quarter and it doesn't really come apparent until the March quarter. And then all of a sudden, here's $5,000 in GST that you can claim back because you didn't do it
It's an
that quarter.
expensive mistake.
Oh, well, it's like if you missed that, that's $5,000 that you could have had earlier as a credit against your BAS. That's $5,000 you didn't spend on the next one. It's a good saving.
Do we see this across other asset classes?
Tools, anything that you might buy. I find they often get reconciled into the wrong spot, but as long as it's somewhere in your file, that depreciation should be captured at the end of the year.
I was having a conversation the other day with Matt Harding, a client of ours up in Brisbane. And he was talking exactly about this. He actually had no idea because at this point in time, he was having all of his bookkeeping done internally by someone that essentially isn't like a high-level bookkeeper. And he found that all of his tools, racking, all of that stuff hadn't been actually coded and sitting on the balance sheet. And so over the last 5 years, he hadn't claimed any of that stuff.
Where was it coded to the profit and loss?
Yes.
He would have claimed it, hopefully.
Yep. Well, his recollection was that he's like, I don't think I've got anything for that.
Wow, okay. So it would have not actually entered the accounts at all.
Yep.
Yeah, so as long as I show somewhere, like I find it most happens when you buy stuff on credit.
Yes.
But sometimes with your assets, it's not really a tax deduction, but if you don't code the assets that you purchase to the balance sheet and they sort of just go through the profit and loss, you would get a deduction for it. But if you ever look at your balance sheet and you're like, I have $100,000 worth of equipment and it's not sitting there, then your business on paper looks like it's not worth as much as it actually is. And it doesn't show that you have assets to use in the business.
Got it.
I'm like, I love when I see people actually have a list of their assets and it's showing.
essentially like rent, mortgage repayments, whatever it might look like percentages.
As long as you follow the rules. So you have to look into it. But you have to have a dedicated workspace. A lot of people here have like home offices set up, like proper home office that they have their admin come to. It's a separate room. It might be more than one room in their own home.
Storing stock and materials in your garage.
Yep. So it's actually really good to have a look at what are my options here with my rent or my mortgage repayments, the interest on that. 100%. Look into it because it's a lot of money that you can claim. So you obviously want to follow, this is one thing you need to know is how big is the space that you're using compared to how big your whole house is.
Yeah, know the square meterage that you're actually claiming.
Yep.
Yeah, what's that percentage look like?
Yeah. Obviously, it gets a lot easier if you have a dedicated workplace like an office or a factory or a warehouse or something like that. It's so simple to make sure I'm going to claim that commercial rent.
Quick sideline question. If you've got a warehouse, so you've got a warehouse, you obviously, we're not claiming that. That's just an expense. That's a part of the business expenses.
Yeah, but that's you claim expenses.
Yeah. Are we then still also able to claim a small office at home?
It would be basically showing how much time do you spend there.
Yep.
So if you do 2 days a week from home in your own personal tax return, if you dedicate some time to work there, you have a home office and you can sort of show by a diary. If you have some proof or some notes that you can show, and it sort of makes sense. Look, you would have to get looked into.
It's
for you
cover
to have
yourself.
That. But it's if you're doing it, just
selfies of me in the office every day.
But it's not even that. But it's guys, if you dodge, if you try to be super dodgy, and you're
hang on a sec, let's just make sure we claim this one. Yeah, cool.
I think it's just cover yourself, be smart about it. Don't try and fit something through as an expense that is absolutely made up. Look, if you have a floor plan and you can see how big a space is, you would just have to explain how you calculate it. So if you're never at home and you have a factory, why would you then worry about claiming more? It's way more beneficial to just have a factory. You have that for a reason. But yeah, if you work from home 1 or 2 days a week, of course you can still claim that as your personal deduction and your personal tax return.
I know this one.
Yes, go.
Phone.
Yeah, if you use your phone for work, and most business owners use their phone mainly for work.
Yeah.
I don't actually know many people that but I can't wait to get away from my phone after work.
I've never made a personal call on that phone ever.
Look, it's a percentage, right? If you use your phone 90% for work, 10%, But it's generally a business tool, and it's absolutely fine to put your phone through your business.
Internet?
Yeah.
Oh.
Computer.
Is there a time frame around when you can actually upgrade them? If I'm getting a new computer every year?
It's every year, to be honest. I think that's probably
if it's a Mac.
I think it's the most frequent. If you got 2 computers a year, red flag.
We interrupt this to play a quick game. All right. Don't get angry at the game.
I just think you need to be careful. Don't claim things for the sake of claiming it. But if your computer breaks and you have to buy a computer within a year, no one's going to worry. If your computer breaks within 6 months and you have to replace it, it's just if you do things like that all the time for no good reason and you can't show actually something happened.
Can we go back to the game?
Shoot yourself in the foot. Yeah, let's go to the game.
I want to call it rapid fire deductions with Arena and Mitch.
Oh my God.
Okay, you ready? Now, just play along, okay?
All right,
it's just a simple yes or no.
Okay, no.
Okay. Now, I'm going to say 5 items, and at the end of each one, you're going to say whether you could claim it on the personal space. Think creatively. Okay, you ready? PS5.
No.
Golf clubs.
No.
Rolex.
No.
Hats to wear backwards.
Depends.
Suit.
No.
Wow. All right, thanks for playing. Okay, let's keep going.
If you go on a personal trip, you can't claim that trip or the meal. If you go on a trip because you're going to a conference or you're doing some teaching, you're going to get a license renewed or doing a course or something like that, you can actually claim that travel, and there is a
proportion.
If you basically go somewhere for a week for training and then you stay a further 3 weeks, you can only claim 25% of that trip. And so anything that would relate directly to that week would be okay, but then the rest would be private.
Next, this is a big one for me because I claim a lot in this space. I personally have a coach, and for me that comes under the education space.
Yep.
I love courses. I love learning. I love more knowledge, and I'm also a big believer that while you're taking your knowledge, you actually have to do something with it. Education, claimable.
This is so funny because every question I wanted to say, it depends. Yes, if it has to do with your work. So if I go and get a fitness coach or a wellness coach, even though it's educational, it has nothing to do with me actually succeeding in my business. So it's personal.
Yep.
But yeah, business coaching, claimable.
Yep. Marketing course.
Yeah, because you do that to actually grow your revenue. There's a direct correlation there.
Yep. I'm a solar installer and I want to get more solar accreditation done.
Yes, 100%.
Cool. So the education space, it's like if this can be something that helps propel your business forward, in a direct way, then it's essentially a claimable expense.
Yep. There's some things, and you called it toys. I had a very specific example in mind because I was thinking, for example, a drone.
Yep.
I know a lot of business owners that actually use drones in their business to assess a property and see the scope of work. Also, they use the same drone for marketing purposes to do shots of how they work, especially like roofing companies. They use this a lot because it helps solar installers.
Air conditioning companies on the high rises in the CBDs.
Yeah, so there's a lot of people here that actually use drones for work, and you might if you use it only for personal fun and your hobby, and you can't really showcase that you're using it in your business, it'll be hard. But those are the things that are in that blurred area where yes, you're using it for business, so it should be a business expense if you're using that to assess properties and do footage of that.
Yep.
But I just sometimes if you use it once a year to do a shot of one house, you might have to say it's only partly business. Anything on the blurred for you?
No, I'm not going to sit here and play the blurred game.
The blurred game.
Because I think that's it. It's like it's a blurred category for a reason. Because it depends. In some instances, yes, you can claim certain things, and in other instances, no, you can't. Your friend Dick might be able to claim his clubs, but you can't. Yeah, because Dick is a fucking golf pro, or there is some direct relation in which he makes his income doing that.
Yeah.
So it's like what might be a no for me might be a yes for you. And so I think that's where a lot of this blurred stuff sits.
Maybe the one thing that you might be forgetting, is that little things, but you can actually claim sunglasses. I quite like that.
Can you?
Yeah, a lot of people can. Not if you work in an office, but if you're out and about and you're on the road a lot.
I spend a huge amount of time driving to clients. Can I claim the sunglasses?
Yeah, so that's driving. That's actually something you can do, which is pretty cool.
Cool. I can't wait to send that through to Mark.
That's fine. So yeah, I think it's just I feel like such a negative person in this podcast.
No.
I'm like, no. But it's also there's a profession out there that upholds the standard.
Yeah.
And they uphold the law. And I think it's really important to just be really clear on no one does this because they don't want you to have fun or enjoy life, but generally to keep a system fair. And I'm not saying that our taxes are going to the right places at all, but there is some stuff is in place for a reason, and it's for society, and the system might not be perfect. So you don't want to pay too much tax at all, but you don't want to go down and be a dodgy person that is not reliable, or you just you're dishonest, because you shoot yourself in the foot. I said that so many times, but in the end, if you ever get audited, just don't try and be so smart.
Yeah.
Just do the right thing without overpaying and just like not asking for, hey, can I do this? You might not be able to, but at least you ask the question.
Yep.